Hey everybody, how you guys doing? Alright, this one's on the ASX index and how Australia lost $85 billion due to the out of control collapsing Chinese market of the Shanghai Composite Index. And this just basically shows you how bad it's getting, folks, or how bad this last week has gotten. This shows you everything bad. It shows you that not only has London gone down, the United States has had problems. It went down as well. But the out of control Chinese stocks have taken the world with it into what will probably be the next Great Recession, if not the economy killer we've all been hearing about the last 10 years or so. That's the one where everything goes down, it does not come up, and they basically do everything else. So, anyways, folks, somebody just sent me this. This comes from smh.com, a Sydney Morning Herald Business Day clip. It's actually coming from Saturday, Jan 9, 2016. Australia is a day ahead of us. This is not a hoax. This is no time travel related situation. It does read that in the margin, this was uploaded rather, January 8, 2016, 5:40 p.m. Our time. So this is only about 2 hours old. This is the Sydney Morning Herald Business Day. ASX, being the Australian stock exchange, loses $85 billion in horror week as investors fret over China. So this is the situation. The Australian dollar, last time I looked, was equally about 85% of our US dollar. I forget what they call theirs. I think it's the Aussie, or basically an Australian dollar. I don't think they have any major name for it. I could look it up, but I'm not going to. It's basically 85 cents on the US dollar. And they are saying that their 85 billion in loss is equivalent in US dollars. So this is actually something we should all kind of worry about. And this all happened because of China, folks. This is not anything independent of that. The Chinese markets went nuts, so their markets went with them. I can show you a graph of the S&P ASX dropping 200 points from opening on Monday through just recovering on Friday, folks. And here's what that looks like. Opening on Monday at or above 53.50. Tuesday down and out by 52. Wednesday almost 51. Thursday way under 50. Going down in Thursday to near record levels, and then coming up to 50 points, or 5,000 points. I don't know if the bottom of 5,000 is the entire economy, or if that's just a point value, and how much each point is worth, I don't know. I don't know the global system. I only know there's only about $2.7 trillion floating around in the US to stabilize everything, and most of that's electronic, so most of that's probably not even there anymore. But there's all kinds of things here, folks. Oop, my bad. Alright, so Australian shares endured the worst week since 2011 and their worst start to a year on record as China's continuing currency devaluations led global investors to fear for the state of the world's second biggest economy. And basically, the S&P ASX, or the ASX basically, index fell, or the S&P ASX index, which is basically what it is because it's a comparison between two indexes, fell 5.7% over the week, losing 85 billion in market capitalism, and they are using a US dollar sign for that. But I'm not certain if the Australian dollar has another symbol or if it would be used here. Anyways, I'm just going to go on with it. The benchmark index lost 0.4% on Friday at 4990.8, while the broader and all ordinaries fell 0.4% and 5.5% on the week, resulting in the 5049.4, which is where it really dipped. And this is all jargon if you don't really understand anything. I don't know exactly how many points everything is worth. I'm guessing they have it on a nice even math scale. 0 is and 5,000 is 5,000 would be what our 70-80% is supposed to be. So I imagine it isn't too big or too bad. But China's efforts to restore the calm to its turbulent markets had some success as the yuan stabilized and all regional share markets are mostly higher for the first time in 5 days. But the ASX, notable exception, China's market was up to 3% in late trade. I believe that's supposed to be on Friday. They should have put that in. Fewer than 10 stocks of the ASX 200 index or have finished even or in positive territory for the week. And there's a lot here. These are just number games, folks. To everybody, these numbers mean almost nothing. The 7% threshold for the market fall basically to trigger a shutdown was too tight and encouraged investors to bring forward selling in an effort to beat the shutdown and a continuing depreciation of the currency. So that's good. At 7% market fall, these guys close shop and they shut everything down, which is good. That's a good way to work things out. I like that. I believe in. I would actually shut it down at 6%. At 6%, it's fallen too much. But these guys do it at 6. I believe America does it at 6.5, maybe 7. I could be wrong, but anyways, I'm not going to go into everything here, folks, because at this point it's just this Commonwealth Bank and that National Australian Bank and Rio Tinto, crumbled to 6.3% of 41.90, and it basically goes on to all their percentages and stuff. And if you're not a native of Australia, if you're not familiar with this ASX 200 index, you're not going to really know what this is and what this isn't. The only thing they're going to really say, and what they've already said, is that basically China's market has somewhat stabilized, and in stabilizing the market, it kind of stopped everybody from losing their end as well. As of right now, though, Monday markets could be atrocious as well. But Australia did lose $85 billion in the week, and that's not money these guys can afford to lose anymore, folks. Thank you.